Hello all, Saturday, February 12th. This is my third time trying to record this video. My microphone stopped working, and then my computer died in the middle of my second one and deleted it. So here's my third attempt at recording our weekend video on why I said to buy calls at 440 and then why 439.75 and then why I canceled that. And we swung puts over the weekend because SPY is just too dang high and it's just going to go down. But in all seriousness, when you zoom out, like, this was the tech bubble. This was the 2009 crash where the world ended. And here we are today. So, yeah, we'll see how that works. I'm just kidding. It's probably not going to do that. It's probably just going to keep chopping, fake out, and then rip higher. But anyway, that's not what we're talking about today. We can talk about two things. We can talk about the bear market and my thoughts on it. I'm sure Richie has more information than I do, because we haven't seen a bear market since I've started trading. 2008, my parents lost everything, almost lost the house, and everybody sold right here. Everybody, oh darn it, I'm on the wrong thing. Stop. Ruining this video too. Everybody. Oh, and by the way, you're going to hear my fan kick on now because this has been so hot, because it's been running for 2 hours. But anyway, so sorry if my mic sounds funny. Sorry if my fan kicks on. It's just what it is. I'm not going to do this again. So let's go back to 2008. What happened? So we had the 2000 tech bubble. Y2K, whatever. Everything ended. We went to SPY was $77, right? Actually, I have no idea. I have no idea what SPY was back then, if it is split or not, because I didn't start trading till it was like 2012 when I started taking it seriously. But anyway, here's what's important. I got my line tool here. I've been telling people to draw lines. Everybody, after this huge crash, everybody who has invested money since day one, since 1929 when it crashed the last time, all those people have only known a bull market, which SPY doesn't go back that far, but so we crashed all the way down in 2000, and then we built all the way back up, made 100% return. And what did it do? Crashed all the way back down to the lows. If you have a 100% retracement, that means it's pretty strong and it's going to keep going. So the fact that we went all the way down and then had 100% retracement from the lows all the way back to the highs should have meant the market is just going to keep going, because it's strong enough to get to 100. It's going to go to 110, 120, and it was probably going to go like this and then bounce and then go higher, right? But it didn't. It crashed. Everybody was like, well, I got back to break even, I'm going to get out. And then, now this is a weekly chart, by the way, but here's the point. We got all the way back down to these lows, and everybody said, the market is done. The market was fun while it lasted, but it's crashed. The world's crashed anyway. We might as well just, like, GM got delisted. General Electric, I think they got delisted. These huge companies were $2 a share. And so all these investors, 401ks, everybody, are like, I'm done. The market's crashed. I'm going to take what little bit I have, my 10% left of my retirement left, and just hold on to it cash. And then what did it do? Right here, it hit 100% retracement, and then what? Ripped for how long? 2009 to 2022. It has just ripped. It hit everybody's stop loss and ripped. So, who's texting me? That's what we're talking about today. It hit everybody's stop loss and then ripped. Same thing in this market. This is easy because it's right here. I didn't really even plan this. Look at this. Gosh, I keep bouncing around. I don't mean to do that. Look at this. It came up to it, it started to fall. Then it climbed all the way back up. So everybody's like, oh, heck yeah, we're going to totally take off. So people started getting in, and then what did it do? It hit everybody's orders and then crashed. Same exact thing this way. Came down, hit everybody's stop loss, and then it ripped. And here is the reason behind that. It's not necessarily just market makers. It's because down here, the people that waited to get down here to sell, those are the last people holding anyway. So once it gets below this, there are no more sellers. Everybody that wanted to sell, they sold up here, and these last few people who waited just to see if there was going to be a bounce, which it bounced a little bit, and then it failed again, they got out too. That means there are 0 sellers. There are 0 people selling their 401ks at this point. Everybody that's still in it has decided, I'm just going to hold it forever and see what happens. So if there's 0 sellers, that means there's only buyers. And what happened? It just ripped, right? So I'm telling you all of this for 2 reasons. 1, to inform you how it works, and 2, to tell you why it did not work on Friday. So let's take a look at a smaller time frame here. 4 hour maybe will work. Let's look at this. So when I say hit their stop loss, that does not really mean options. It means people who are trading shares, right? So when you trade shares, let me do this. Here's a great example from Friday. If I was trading shares on Friday of the S&P 500 or SPY, I would have seen this. We would have fallen down the day before, right? Chopped around, but we kind of came back. And then we started just consolidating, trying to figure out where we're going to go, and then this huge green bar comes in. And everybody's like, oh, heck yes, buy the dip. So, if you were trading shares, this is what you would do. You would put a limit buy order for SPY at 451.61. When it got above this big igniting candle, you would buy it and it would just keep going higher. If you were doing that, you would also put a stop loss for your shares at 450.51, let's say. It's not exact, but this would be your stop loss, this bar, because you know if it goes below here, then they're probably going to come back down, and it's just not going to work, right? So if you were buying shares, and I don't know how many of you guys play shares day trading, it's so much easier than playing options, because you just type in your order and you walk away, and it either works or it doesn't. You have very limited risk. You have a very limited reward, because here's what you would do. Okay, you got 450 to 451, so you've got $1. So what do? You say, okay, here's my entry. If it comes back up here, I want to get in. If it breaks this, I want to get out. What's your target? You want to do a 2-to-1 risk to reward. So if you are risking $1, 451.50 to 450.50, then your target would be 452.50, 453.50. And that is where you would sell your shares. So you buy your shares here, sell your shares here. If it breaks below here, you get out at a loss, right? That's how you would trade shares on these candles right here, this 3-bar play. So, where was I going with that? Stop losses. So, this would be everybody's stop loss. If you notice, all of the people who were buying shares, because options obviously don't change the price of the stock. Not if you buy a call, it doesn't change, it doesn't make SPY go up. Now when Nancy Pelosi does, it does, but that's a totally different story. When you buy a share, you make the price, or when you buy 100 shares, you make the price actually move on the chart. So what happens? This was their stop loss. 450.50 was their stop loss. A bunch of people got out. They got their stop loss hit because almost every shares trader, 450.50 was their stop loss. 451.50, 451.60 would have been their entry. And if we get back to 451.60, we need to get in calls. But that's not the point. This is their stop loss. So what happens? Comes back to 450.50. Those people that are still holding some shares, they want to get out. So they sell at 450.50. Comes back to 450.50. They sell their shares, right? Then it comes up and it can't even get up there, and so people just dump the rest. They're like, let's just get out. It's the weekend. I don't want to be holding this stuff for the week, over the weekend, and it gapped down 5%. So let's just get out, and it just crashed the rest of the day, right? So you have to think like a shares trader to trade this way, and I think that's why I've been doing a little bit better in this recent market, because patterns actually work, and the Federal Reserve isn't just randomly buying in the middle of the day. This is actual trading is happening here. So what happened? I said, so we failed. We started cascading, which when we cascade like that, there's usually always a bounce. We went from 447 down to 440. And I said at 439.75, let's buy calls. So let's put a line at 439.75. I said buy calls at 439.75 if we get down there. And this is why we were like up here at 444. I said buy 439.75 and ride it back to 444. I didn't need to move that. So why did I say 439.75? So let's go back to the daily chart here. If you look at the daily chart, you've got a very important price. 440 is a round number, which is where a lot of people take profit, even numbers. And it's also been kind of a magnet. It's been a price here, price kind of here, it turned around here. When we broke below it, we sold off. When we got above it, we popped. When we hit it again, we sold off. Here we sold off. Here we got above it and we ripped. Here, last week or two, we broke below it, came back up, got rejected, came back up, got rejected, got over it and actually rejected, over it, and then we came back and it flipped again to support. So 440 is a big number for S&P. So we know all of these times that this is touched. Here's what's important. If the Federal Reserve is not buying, let's say you have 500 apples. Not apple shares, apples like that you eat. You have 500 apples, and you're trying to sell them on a street corner as a kid to make some money. So you're selling them for $1 or whatever. You got 500 apples, and you're having a hard time selling them. So mom comes in, and I'm just making this up, by the way. I did not rehearse this. This is all new. whatever. Mom says, I'll help you, son. I'll buy 300 apples every month. I'll buy 300 apples. And so you're like, okay, well, I might not be able to sell all 500, but at least I can sell 300 to Mom. 100% for sure. No questions asked. I will at least make 300. That's what the Federal Reserve was doing. They said, we will always buy every month this many billions of dollars. I don't remember if it was 80 or 120 billion. I don't remember. I have no idea. But they were buying the market. Ever since COVID, the Federal Reserve has says, don't worry, honey, I will help you out. I'll buy some from you. Right? So I'll make sure that you're still successful. Every time you get a little worried because you can't make it, I'll help you. Don't worry, I'll help you. Don't worry, right? So the Federal Reserve has been holding up the market for the last 2 years. Now we're up here, and the Federal Reserve says, sorry, it's costing me too much money to help you anymore. Here's your 500 apples back. Good luck selling them. So we have no help. And that's why the market is just starting to sell off, because they said there's nobody to help us. So where I was going with that was, when we get to 440, normally the Fed would just say, I'll help you buy, whatever. Every dip, I'll help you buy it. Now we have to play a different game. Now we have to go to places on the chart where there are buyers and sellers. So there is JP Morgan is here. JP Morgan says, if SPY gets down to 440, I'll buy your shares. I don't want it at 460 though. I only want it at 440. And then you got, like up here, 450. Let's say you got, Bank of America, right? And they said, if you want to sell your shares to me, I'll take them at 450, right? So you have these levels now of institutional buying. You got 450, 460, 480, 470, 440, 430, 420, obviously. Big round numbers of institutions who are willing to buy. So when you've got BlackRock or one of these other hedge funds, and they're holding 4 million shares of SPY, and they want to get out, they can't sell it at 473.66. But Bank of America will buy it at 450. So when it gets down to that price, there is a high liquidity. It means they can get in and out. They can buy it or they can sell it easier at 450 than they can at 450, 782 or whatever. Does that make sense? Hope so. So it's called liquidity. How easily you can exchange things in money, exchange things for money. If it's liquid, that means it can move. You want to be able to move money. So you don't want SPY to be sitting at 442.61 because there's nobody there to buy it. There's nobody there to sell it. It's just in no man's land. It has to be at 440 or it has to be at 450. See how that works? So that's why I said on Friday, at the beginning of the day before the market opened, I said 440 puts off the open because that is where SPY is going. It's important because usually at the end of a week, especially, people want to resolve their books. And the market is always going to a destination. And we were going, so here's the deal. We already broke 450 and we were looking pretty bearish. So all the people at 450 were like, I don't think I'm going to buy it. I'm going to wait till it gets to 440. And so what did it do? It just went down to 440. So we got in 440 puts at the open. They started to pop and then they failed. Came down to 440. And then why did I say buy 439.75? I mean, you could have bought it at 440. Whatever. It doesn't matter. But that goes back to our buy the stop loss. This is all coming around now. So we got 440 as a major level. As you can see, that's where the majority, see here? There are no buyers in this area. There's nobody to buy your shares at 446 or 440, 472. They want it at 440. That's when they start buying. If people want to sell, they don't want to sell it at 450, 156. They want to sell it at 450, right? So it's going to jump in between. Now, it might not jump $10 in a day. That was just absolutely ridiculous. But in a week, it can move $10 in a week. But it's going to places that have high liquidity, where there are a lot of buyers and a lot of sellers. SPY is always going to gravitate or move to those places. And once you run out of buyers at 450, then it's going to have to go down to 440 before there's more buyers. If it gets to, let's take a bull scenario here. So we're at 450. Okay, all the sellers are gone. There's no more sellers anymore. Then it'll go higher. It'll go back to 460. And it'll see if it'll test 460 and say, okay, well, there's some sellers up here, so I guess I'll sell up here, right? So take this all around, or circle this back to what I was trying to get at. We are buying, can't make my circles go away. How do I do that? We are buying under everybody's stop loss. So if people were long the S&P 500 up here, they tried to buy this dip because they thought this was support. So these people bought here. They're like, oh crap. So they went all the way down here. They're like, well, it's okay. It's going to bounce at 440 anyway. But it didn't. It broke 440. And then that's where their stop loss got hit. They're like, oh crap. And then the banks came in and they said, sure, we'll take it. And so they brought it back up. So in this kind of market, we're going from now on, at least till we get back into a bull market, we're going to be buying and selling people's stop losses. Just like right here. Once we hit the stop loss, that's where you buy puts. That's where you buy puts. That's where you buy puts, right? Until eventually, if it gets back above here, that would be our stop loss, and that's where we would get out. But that's what we're going to do from now on, buying stop losses. So I knew everybody's stop loss was even number 440, so I said, once we break everybody's stop loss, get in, and it's going to bounce, which it did. Hopefully that's clear. All that to say, that's why I alerted buy it at 439.75, not 440. Because it's an extremely, extremely low risk trade. If we get in at 439.75 and we're wrong, we only have to wait like another 30 or 40 cents to make sure we're wrong before we get out. So we're down maybe like 50 cents on an option. You know, that's extremely low risk, because if we were trying to buy a breakout or something, you know, if we were like, you know, trying to buy, well, we did. We had a really rough time in the morning because I was trying to buy a breakout. I said buy it under 439.80 or 449.80. $449.80. Whatever. It's close enough. I said when we get below here, we want to buy puts. Well, what happened? We got in here and it shot all the way back up to here. So instead of being 30 or 40 cents negative, now we're, you know, $3 negative, $2 negative, and our stop loss is $3. We have a $3 stop loss until we know we're wrong, because it could bounce off here again and come back down. So that was really kind of dumb. We should have just waited. But if you buy people's stop losses, you'll know right away, just like right here as well. So if this was everybody's stop loss and you wanted to buy calls here, you could have done it pretty successfully, because you bought it here, and if it doesn't bounce, then you know you're wrong, and you just get out. A very small risk. all that to say, why we did not get in is really important as well. Because here's what happened at, I don't remember where we alerted it, around here somewhere. I said buy at 439.75 because JP Morgan has an order at 440.00. The problem was, and I'll show you another example of this here in a second to make it clear. The problem was we had this big bottoming tail right here. And retail traders did not wait for JP Morgan, who's sitting right here. JP Morgan's sitting right here. They didn't wait for JP Morgan to help them buy it. They got in early. And what happens is there's no momentum. So what did we do? We just chopped around. It was just junk. JP Morgan came in here a little bit and shot it up. JP Morgan came in here and shot it up. I don't know if it's JP Morgan, that's an example. But do you see how this is important? 440, that's where the banks are. They're buying it. They're just straight up buying it, right? Like, that's solid. This is junk. This is solid. So if you buy it at 441, trying to get in early before the bounce, then it's just going to fail. So what happened? We came down here, it bounced huge, and I said, cancel that. We don't want to be in a trade if it comes back to 440. It's not going to work. Because now we have a new scenario where JP Morgan is saying, crap, I'm the only person buying this. Let's cancel our orders here, and let's wait for it to get down to the next support. Let's get in cheaper because nobody else is buying except for us. Where's the next support? Right here. 430, 432 maybe. But I mean, round number 430 is a good place. That's where buyers came in. 430 is where you're going to want to buy calls. Unless we do the same thing. If we get down there and we don't touch 430, don't buy calls. Because what's going to happen is it's going to go like this. It's going to bounce early. And these people are like, I don't like the way that looks. I don't think I want to buy this here either. So it's going to do the same thing it did Friday night, and then it's going to fail to 420. I hope that makes sense. Maybe you learned something on my stupid ramblings. So what we're going to do is we're going to buy under people's stop losses, but where the banks are. And then what we're not going to do is try to get in anything early because we don't have the Federal, like normally the Federal Reserve would just say, hey, it's 2 o'clock, turn the printers on, and it would just rip, right? But we're not doing that. Now we're saying JP Morgan's at 440. They will help us push the market up. They helped us last time push it up. They will help us if we get down to 440. So let's buy it under 440 and buy calls. Same thing with puts, because there are an equal number of sellers as there are buyers. Let's take this as an example. Oh, here's an example. I think. No, not really. Anyway, we're gonna, if we pop and break resistance, we can short people's stop losses, and by puts we can also buy people's stop losses. And this is how a normal market works when the Fed is not just buying things just to keep stuff from falling. So I don't know if we're actually going to crash. I don't think we are. I also have this theory, real quick before I leave you guys, that I was talking to Ethan with earlier about buying people's stop losses. If you look at the weekly chart here, what happened? Everybody who bought SPY down here, their stop loss was right here. because that was the bottom, right? So if you bought in here, this is your stop loss. If it breaks that, then you don't want to be in it, right? That's your shares. If you're trading shares, that's your stop loss. So last week, or a couple weeks ago, look at this. We hit everybody's stop loss and then ripped. That was 421 to 460. That was a huge move. Anyway, here's my theory. Here's my little theory. So I've got two theories. Let me delete this. Bull scenario and bear scenario. So this may or may not be everybody's stop loss now, because we actually have some stuff over here at around the same levels. But we'll just say this is 421 is everybody's stop loss. Here's what we might do this week. We'll come down to 430, check it out, see if anybody's still buying, because there were buyers right here. And if we don't bounce, then if we break 420, load calls, because everybody thinks we just put in a lower low and we're gonna bounce. We'll probably actually bounce here, back where we did. Look how much support is right here. Right here, right here, right here, right here, right here. We got below it, bought it up right here. So 416 actually is a very highly liquid, between 420 and 416 is a very highly liquid spot. My guess is by February 28th, or however many days there are this year, is we are going to go to the most liquid spot on this chart, which is between 416 and 420. So anything around 416, I would probably buy calls. When all these people's stop losses get hit, buy calls. And we could do something crazy and put in a new high. That's not our expectation. Our expectation is just a simple bounce. But so around 416 would be a good place to start buying calls, swinging calls for another rally. And if for some reason, on the other scenario, if for some reason we got all the way back above here, buy puts. Because what will happen is we'll come all the way back up, their stop losses will get hit, and the shorts will get in, and they'll dump it over 460. My guess is 460, 475. I have that number because if you look at like a 1 hour chart, let's go to, this is just free extra information, 464.75. Look at how liquid this spot is. There are a ton of buyers and sellers at 465. If you zoom in closer, you can see it's 464.75. But I would guess that a giant bank like JP Morgan or Bank of America or Wells Fargo, whatever, they have their orders at 464.75. You get below it, and we can do puts, get above it, and we can do calls. So my guess is we're either going to go to 420 by the end of the month, or we're going to go to 465. And we'll see how that plays out. Hopefully that was helpful and that wasn't too much information. So we'll see. We'll see how 440 holds. Hopefully hopefully we can get our retest of 420 quickly. Also, if you'll notice, the faster you move down, the higher you bounce. If you just kind of just chop around, then your plays don't work as well. But if you like dip, then you bounce. Dip, bounce. And the same thing, if you rip, then you fail. So if we get a massive sell-off to 420, 416 or something like that, just throw every dollar that you can into calls, and we're going to bounce back to 440 because that's where the liquidity is. You can see here, you got 440 and 420. Bounce, bounce, bounce. Right? That's where they're going. There's buyers here and there's buyers here. They have to go to those two spots because there's not as many in between. Now they're starting to become. As the week went on, see this? We went all the way from here to here, 440 to 420 to 440, and then we was like, okay, well, let's go ahead and take 430. 430 is good enough, and then it started to work. But so 430 might actually be some good support. But again, see, you get below 430, buy calls. Hit everybody's stop loss and buy calls. Hit everybody's stop and buy calls. Hopefully that was informative and I didn't take too long. You guys have a good evening, and we'll talk to you Monday. Thanks.